Bankman-Fried. Happy New Year, you magnificent melon heads. First trading day, 2023. I hope you all had a fantastic New Year. And, well, let's just hope 2023 ends up being a little bit or a lot of bit better than 2022. We are now officially 30% of the way through the decade. How much worse can it get in 7 years? Don't answer that. But right now, looking at markets, it seems like, well, everything is up right now. Stocks are up. Bond prices are up. Gold and silver are up. The Dixie is up. That's not supposed to work that way. Where's all this money coming from? We'll see if we can figure that out. But markets feel a little odd this morning, but we will see. By the way, I got to say hi, Mom. Hi, Dad. I love you guys. And shout out to my Patreon supporters. Thank you guys for everything you do for the channel. And let's get right into it. Let's bring in my man, Mish, this morning and see what is going on in the indexes. Mish, how are we doing today?
I'm doing great. As I was telling people in chat, I am warm and dry.
Warm and dry. Yeah, we did. We finally got a break in that ungodly cold. Good riddance. I hear it's coming back, sadly. But, well.
Yeah, there's a big atmospheric river that's about to hit California again. They just had one 2 days ago and another one's coming. Yeah, it's coming out of La Nina is going to be rough for California.
Yeah, got to watch out for those atmospheric rivers. Get you every time.
Every time.
I totally don't know what that means. I don't want to know. Just let me know. Wake me up when it's spring. Got 90 days of February we got to get through, and then we'll see what's going on. All right, let's take a look at what's going on in the indexes right now. Looks like the S&P is set to open about 27 points higher, or 0.72%. The Dow is set to open 165 points higher, or a 0.5%. And the NASDAQ leading the way right now, 111 points higher, or 1%. So it is risk on when it comes to stocks right now, with the multiple heavy NASDAQ leading the way. Now, let's take a look what's going on here. The DXY, this is interesting this morning. The DXY is up, I guess we'll say it's up 1% or 0.98%. I'm surprised to see the Dixie up so much with stocks up so much at the same time. It's been pretty rare this last year to be seeing that.
Everybody's buying everything.
Yeah, but what are they buying it with? If everybody was buying everything, I would expect to see the dollar dropping because people are trading their dollar for those things. It just, something smells a little fishy this morning. That's all.
There is. There's some movement in the euro and the Australian dollar, but not enough, I think, to cover what's going on.
Yeah, the Australian dollar, I guess that's an input into the DXY also, but it's a low input. So, moving on from the Dixie discussion, looking right here at the bond market right now, we've got the long end of the curve. The yields are significantly lower. Remember, bond prices and bond yields are inversely correlated. So when you see all this red in the bond yields this morning, this is people buying up bonds. Specifically, they're buying up the long end of the curve. They're buying the 30 years and the 20 years, which are up about 2.25%. I'm sorry, the yields are down about 2.25% on the long end of the chart. And then, up towards the short end, the 1 month, 3 month, 6 month, we've got a much smaller move. Some of those are even positive. So that is a further inversion in the yield curve. The inversion is deepening. And you could also classify that as a flight to safety, right? People hiding on the long end of the curve. That's where people would traditionally run to for cover during bad economic times. But it's weird to see that while simultaneously we're seeing moves up in stocks. So this is why I'm saying things don't really make sense right now. But you know what? It's still the 2020s, so I guess we'll just move right. We'll move on from there. And then looking in the commodity space, I've got gold is up about $19 or 1% right now. Gold looking good at $18.45. It's I heard it was a 6-month high recently. I haven't looked at the chart that closely. Silver up another 2.3%. Currently trading at $24.60, up 56 cents this morning. So silver is marching higher. I like the shiny. I like to see it moving that way. Platinum trading over 1,000 now, pushing even 1,100 right now, up $11 this morning. Those platinum inventories on the COMEX are getting very low. Shout out to my man Neil Hahn, who has been pumping platinum for quite a while now. Neil, are you going to be rewarded for your patience soon? We'll see.
Well, it
Oil.
is
Hey,
down.
look at that. We found something that was down today. Oil's down. What's up, Mish?
Platinum, the levels in the platinum, just to let everybody know, is about 165,000 ounces, and it's been going down almost just steadily. There's not been a whole lot of inputs to it.
Yeah, the platinum story. Mish and I were talking before the stream. We were deciding how closely we were going to cover platinum or not. It's hard to tell. It's such a thinly traded metal, and the COMEX. There's so little metal actually moving around on the COMEX. It's hard to really look at that and see what's going on. And whenever I think platinum, I think automotive market for demand, and I think South Africa for supply. And those are really the two factors that affect platinum the biggest, or how are things in South Africa and how are things in the automotive market. And South Africa is always a little politically unstable, but right now things aren't that bad politically in South Africa. That's a relative term, but relative to the last few years, things aren't that bad. And the automotive industry is just garbage right now, even though new car prices haven't really come down that much. There's not a lot of cars getting made. I don't. The supply demand dynamics in platinum don't really impress me. Let me just put it that way. That being said, the inventory on the COMEX, you can't argue how low that is. So we'll see if these higher prices hold or not. That's my very shallow dive into platinum this morning. And like we said, oil, that's the one thing that's down this morning, along with natural gas. And really, the energy commodities are the one thing that's down right now. Everything else is up. Again, today just does not make sense. I want to send a shout out to my man, Brian Zarb from the technicalchartist.com. What's going on, Brian? He sent me this morning. Check out the imminent death cross on the DXY. And here we are. This is looking at this is going back to about August and the Dixie, the US dollar index. Again, this is the dollar measured against other global currencies. This is not the dollar measured against stuff. But we're looking at in blue here is the 50-day moving average, and in red is the 200-day moving average. And these two lines are about to converge with the 50 set to move below the 200. And that is a very bearish technical indicator. That is known as a death cross. And it looks like we are just a few days away from a death cross in the DXY. We'll see if that signals an end to this dollar milkshake of a 2022 that we had. And is 2023 going to be the year of the weak dollar? We'll see. Right now, I mean, we had that big technical breakdown in November in the DXY, and now that the Fed is at least slightly less hawkish than they've been, we'll see if that translates into a lower dollar. So that's what's going on in markets this morning. Again, things just doesn't smell right to me. Now my nose isn't always right. It's been right in the past, it's been wrong in the past. But something doesn't fit here. Higher stocks, higher Dixie, higher bonds, higher monetary commodities. One of these things has to break the other way today. I don't know which one it's going to be, but I have a hard time believing everybody is buying everything this morning. It just doesn't sit right with me.
Just that New Year optimism, man, taking the world by storm.
Sorry, Misha, I don't do optimism. This is not an optimistic place. If you've been watching this channel for any amount of time, I am not known for my optimistic appraisal of any given situation. All right. I'm not going to go out and say I'm a fudder or I'm a doom and gloomer, but I do wear perma-bear right here on my sleeve. I don't hide that.
Everyone should know that the current macro course of the country that people are talking about is a drop in CPI into deflation, followed by rapid inflation. So, I mean, we've got some good stuff coming up.
Now, when you say deflation, you mean negative CPI prints?
I do.
Wow. That would be interesting. I'm going to go out on a limb and say we are not going to see a negative CPI print this year. We could see disinflation, which means less positive numbers.
Which is we are currently seeing disinflation.
Yeah. Am I going to have to eat some crow later this year, Mish? Are you gonna say, remember New Year's, Jack, when you said we wouldn't see a negative CPI this year? Hey man, if you get it, feel free to beat me over the head with it later this year, because that's a pretty bold call.
It's people on Discord knew I had that chat a little with the AI, and I got pretty deep into risk and the nature of risk and monetary policy. So I taught myself a lot about disinflation and deflation here in the last week or so.
Well, we're still in a 7 handle, heading lower, but well, let's talk about that. What would a negative CPI print require? I mean, it would require energy prices to go negative. It would require probably a serious correction in housing. We just wrapped up that interview series with the Happy Hawaiian where we talked about how housing is already, at least the rent is already starting to come down. We've had 3 consecutive months, according to like a Zillow or a Redfin, where the average rent in the country is heading lower already. But the CPI is still heading up in the rent department because it was so understated with the owner's equivalent rent, something I've railed against on this channel before. So it would require negative energy prices, which we could be headed for. A severe deep recession would bring that. We're already on our way to negative rent numbers, although the lagging indicators in the owner's equivalent rent may not catch up in time.
Yeah, we're not sure about that.
Food prices, I wouldn't bank on lower food prices. Car prices, I think, already heading negative, at least in the used car. You know, we went from plus 40% used car price inflation statistics in 2022. Now we're back down where I think they're actually going to be negative year over year pretty soon.
I do want to say one thing here real quick to a comment. So we're talking not about there's two types of disinflation. One is monetary, one is prices, right? And when you talk about deflating the money supply, that is currently happening. We deflated it by 200 billion last year. Not a lot, but it is happening currently.
Yep, let's bring that up. Let's look at the Fed's balance sheet here. This is the Fed's balance sheet going back to about 2005. Let's shrink the time horizon a little bit. We'll go since the start of the unfortunate health situation in 2020. I mean, there it is. You can see pretty much peaked. The Fed balance sheet peaked just under 9 trillion and is now unwinding currently at about 8.5. So hasn't been a lot of monetary tightening, although there's been the most tightening the world has ever seen in the shortest amount of time. But even that is just a drop in the bucket compared to the great balance sheet expansion that we've witnessed over the last 20 years. So we've still got a long way to go, and already cracks are starting to form in the system. So
if everything that is considered discretionary pricing, that means you control the pricing, it goes up and down. Food is not discretionary pricing. Food is pretty much food, right? Your staples never go on sale. That's just the price of them, right? So anything that can go on sale is going to cause a lower price. So the theory is people have so much inventory and nobody's buying all of a sudden will cause all the prices to go down because they have to. They have to get cash to pay the employees. So that is going to cause, if we have deflation, that is what's going to cause it.
Yeah, I can tell you one sector that I am going nowhere near in 2023 is retail stocks. Not with a 10-foot pole. I wouldn't touch them. You've got big inventories. You've got a consumer that is up to his eyeballs in debt. You've got wages that are not keeping pace with inflation. Something else we talked about with the Happy Hawaiian, how the job market is not nearly as strong as they're advertising. Not nearly as strong. And that all spells bad news for retailers. So that's something I'm staying well away from this year. I'm probably going to stick to my original, back to necessities. Eat and heat has kind of been my strategy for the last year or so. I'm probably going to stick with that this year. I mean, energy looks awful right now, but I think energy probably has better news on the horizon. We'll talk about energy in a little bit. But food, like you said, its demand is inelastic. Food is something people need to buy during good times, and food is something people need to buy during bad times. So they might change what they eat.
See that movement from upper tier stores to lower tier stores. We saw the economics of vice drop off during the summer. We're starting to see people move from store to store. So these money saving tactics are already in place.
By the way, speaking of food markets, totally unrelated to market moves, but my hens are laying an egg a day each for the last 2 days. I got 15 eggs 2 days in a row, every single one of them. It's a new record for my girls. They are happy ladies. My chickens are really producing. And hey, the price of eggs is still on the rise. So the economics of my chicken coop continue to improve. I'll keep you guys
Well, that's
updated.
$12.50 right there.
Yeah, I'll take it. Not quit your day job money, but I already quit my day job, so let's worry about that later. Thank you very much, Mike Binder from Robert RC Models. He says, Happy New Year. Sit back and enjoy the ride. Well, it will be a ride in 2023. Will it be an enjoyable ride? That remains to be seen. If I had to bet, I would say probably not, and I am still short the indexes. Though my index shorts are probably not doing so well at the moment today. But thank you very much, Mike. I appreciate the super chat, sir, and the support of the channel as always. And speaking of the indexes, let's look at the indexes because the market is open now, not the futures. Let's look at the actual. We have got the Dow Jones is up 75 points or about 0.25% at the open. S&P is up 16 points or 0.44% at the open. And the NASDAQ is up 80 or 0.77% at the open. Looks like giving back a little bit of those gains early on, but we'll see if that one holds. We'll check in back with that before the end of the stream. So far, stocks are off to a good start for the year. DXY still in positive territory, up about 1%. All right, let's talk about some of the...
Silver moved a little. It went up 20 more cents, and the bond market buying continues.
Yeah, I'm seeing silver is right now at $24.66, up 62 cents. And let's look at bonds real quick. Yep, people are still buying up those bonds. The long end of the curve up 10 basis points, the 20 and the 30. So people buying everything today, buying everything except energy. Let's talk about energy. Look at natural gas futures. Ouch. $4 natural gas futures. That's an ugly chart. Now, you'd think coming out of the worst cold spell to hit the country in a couple of years, natural gas would be doing pretty well. Not so much. And Mish and I were talking about this one before we started here. I think probably this is largely being driven by what's going on in Europe. Remember, the U.S. is now one of the world's, if not the biggest supplier of liquefied natural gas in the world. So what happens in Europe affects the LNG market, will affect natural gas prices here in the States. And, well, Europe, Mother Nature to the rescue. It seems Europe has been bailed out by the weather. European cities break temperature records as warm winter holds. This is in Bloomberg. Mild weather is set to continue easing the region's energy crunch. Lower natural gas demand has driven benchmark prices down. So, we talked a lot pretty much all throughout the summer about this economic catastrophe that was awaiting Europe because of what they have done with the energy markets. And then when the Nord Stream pipeline was blown up, probably by us, and then the flow was shut down through the other pipelines.
At our direction.
I'm sorry, what was that? Oh, at our direction.
In the end, they're going to blame it on Liz Truss.
Oh, sure. Why not? She's an easy target. Let's put it on Liz. I don't think it was who they initially told us it was. Let's put it that way. But so far, nothing really has happened with this European energy story. We had some tomato sauce was smeared on some paintings. That was all very entertaining and everything. But this economic calamity to hit Europe hasn't materialized. Well, it's because it hasn't gotten cold, folks. And that's why it just hasn't happened. It's not because European energy policy suddenly sucks less. European energy policy is every bit the joke it's been all along. They just got bailed out by the weather. They got lucky. Well, luck turns eventually. So just keep that in mind. I wanted to show a couple of things. Check this out. This is ICE Dutch TTF natural gas futures. And this is going back to the start of last year. I mean, talk about volatility. I mean, this is a picture of volatility right now. Here was that spike back in August. It went over 300 and almost 350 euros per megawatt hour equivalent for these natural gas futures. Now at 76. All right. The European gas market has not improved. What happened is the tanks filled. There was very little demand. And so there's no need for more gas in Europe. At the moment, there's nowhere to put it. This can change on a dime if the weather changes. But for right now, the prices are low and it's going to stay low as long as the weather holds. And this is showing
Someone
up.
asked.
Go ahead, Mish.
Sorry. I was going to say, someone asked about the SPR relief, and I think we're on energy right now, so might as well talk about it a little. So we did release oil in December. We released the last 15 million of the 180 that they said was going to get released at the beginning of the year. Now, what they didn't tell you is that we have a mandatory sell-off in January of 35 million barrels because the new bill said stop the sales from 24 to 27, but we still have to do the one in 23. So in essence, we are still going to continue dumping the SPR for at least another month.
Now, was it January of 2024 that they announced they're going to stop?
Yes, we will not sell in 24.
Interesting. Just in case you were wondering if the SPR wasn't a political tool or not, we're going to stop dumping right before the next guy takes over, whoever or girl, whoever the next one may be. That's interesting. But yeah, we may actually find out what the supply and demand of oil is, but so we're going to have to wait another month. Is that what you're saying? Because we have this previously agreed to dumping of the SPR that started, I believe in 2016 was when that started. It's a few years old.
Yeah,
So.
what they did is they started with budgeting sales in of the SPR as kind of the save money thing.
And
it's
that was
million.
That started in 2016, which was a year or two into the Saudi oil price war against the U.S., right? That was back when the Saudis were trying to shut down U.S. shale production. Mm-hmm. Prices went from over 100 a barrel all the way down to, I think, 28 was the low. They eventually went negative during COVID. So it was a different time when that was agreed to. The supply-demand dynamics were a little different. Now, who knows? Who knows what the oil market's going to look like in a couple of months? Just our leaders are not done making a mess of things. Let's put it that way. But this energy situation, we're also seeing this. This is Germany's CPI year-over-year number came out today. 8.7% inflation in Germany year-over-year, and that's down from 10.4 a month ago and from a peak of 11 in October. Now, you look at this chart, this kind of looks a little bit like this chart. The time frames vaguely, or they do kind of line up. And this big jump in German CPI follows about a month after this big spike in natural gas futures in this TTF hub. So, to see this inflation coming down in Europe year over year, I'm not surprised to see this coming down. This is the energy trade. And, this big spike in energy prices that I was expecting in winter has not materialized because winter never showed up in Europe. And, it's only going to last so long. The weather will only cooperate for so long. And, Mish, correct me if I'm wrong. You're saying it's supposed to get cold in Europe, next week or 2 weeks from now?
Yeah, next week.
Next week. So we'll see if they're still singing this same tune next week. That's all I'm going to say about that. And by the way, this is go ahead, Mish.
I said that's all I'm going to say about that.
What we're looking at right here is Schneider Energy, ticker symbol LNG. This is one that I don't have any position in at the moment. I don't plan on taking out a position in this one. I was just looking at this today because whenever I talk about European energy, this is usually the way I trade the European energy market. They buy natural gas here in the States, and they sell it over in Europe. And, check out what's going on right now in the technicals on this chart. We're looking at about a 1-year chart here, but when you zoom in, LNG, Schneider Energy, has just broken below the 200-day moving average, and it has broken below its high from back in March of last year. So this looks like a pretty solid reversal in the price movement of Schneider Energy. And if that big cold spell doesn't arrive in Europe next week, that's really the only thing that could save this chart. So keep an eye on this one, folks. Keep an eye on the technicals here. This one is not looking so good. I may get back into this one because I think Europe's energy story is probably going to be a multi-year story. But in the short run, This one has had one heck of a run all through 2022, so I think it's probably due for a pullback anyway. So I'll be looking to get into this one significantly lower from here. If the market gives me that opportunity, I may end up taking it. But for right now, no position, no plans to open one in the near future. Also, by the way, this pretty closely resembles the DXY chart, doesn't it? See that DXY chart? That kind of looks a lot like the LNG chart. That's interesting. Something to keep an eye on. All right, what else is going on in the news today? Check this one out. Our good buddy Sam, hi Sam, is in court today, expected to plead not guilty at his arraignment. How is this guy going to plead not guilty? What is his defense? I don't understand how he's possibly going to defend himself. I mean,
no, he's completely going for the "I'm stupid" defense.
Yeah. Well, I've noticed Sam Bankman-Fried has a couple of different tactics that he uses. He's a very good liar. I'll tell you that.
I call it the Dukes of Hazzard defense. Just a couple good old boys.
Oh yeah, he's just a kid who got in over his head, right? That's all. You know, he was the most generous guy in the world. He wanted to change the world. He was trying to do good. And so, you know, he did what any good-natured person would do. He stole from millions of people. No, he wasn't a good guy. He wasn't just in over his head, right? That's his first tactic, is to just say, look, I effed up. I messed up. I'm sorry. It's a tragedy that I robbed millions of people. I'm so sorry about that. That's his first thing he does. Second thing he does is when he gets asked questions, when he's cornered in a lie, people, and I've seen a number of people did this on Twitter Spaces and in interviews, when he's asked a question, he'll find some little nuance within the question to focus on, and he'll start dissecting that point and asking for clarification and elaborating on this unimportant part of the question, and he'll talk about that for 10 minutes, never even answer the question, and the interviewer gets frustrated, gives up, and moves on. He does that over and over again. And the other thing he does when he gets cornered in a lie, when he can no longer play stupid when he gets caught in a lie, now all of a sudden he's the MIT graduate again, and he'll start throwing out technical jargon that the interviewer is not prepared for, that doesn't have an answer for. And so to avoid looking stupid, the interviewer will just allow that answer and move on, even though whatever Sam just said was more BS, more lies, but it was buried in technical jargon. The interviewer doesn't want to look stupid, so they move on. Those are his three tactics that I've seen him do over and over again. He'll probably try that in court. So I hope these prosecutors know what they're talking about. Anyway, bigger question I have, and Mish and I have been talking about this, who is he going to give up? I mean, he's pleading not guilty. So I guess the answer is nobody, right? Because you only ever plea deal, you only ever like inform on people, you can only rat out a bigger fish. If you rat out a little fish, they're not going to let you off. The prosecutors, they always want the bigger fish. And who is a bigger fish than Sam Bankman-Fried right now? I can only think of 2 or 3 people in the world. Jiangping Zhou, probably one. And that's somebody I think Sam Bankman-Fried would not hesitate to roll over on. And then the other ones are the guys over at Bitfinex. Giancarlo Devasini, the CEO of Bitfinex and Tether, Paolo Arduino, chief gaslighting officer over at Tether. And really, Binance and the Bitfinex and Tether guys, they're the only people Sam could possibly give up that would get him a lighter sentence. So unless he's going to give them up, he's going to court. He's going to jail for life. They're going to love him in prison. So that's going on today. There was also, this came out over the weekend, speaking of the crypto. This is from Cameron Winklevoss, which anybody who has ever seen the movie The Social Network will recognize that name. He is one of the Winklevoss twins that claim to have came up with the idea for Facebook that Mark Zuckerberg allegedly sold or stole, and they settled out of court for an undisclosed amount. Well, Cameron Winklevoss is the CEO of Gemini. Gemini is another one of these crypto DeFi platforms. And Gemini made a very large, I believe, $900 million loan to Genesis Crypto. It's real easy to get these names crossed. Gemini, the Winklevi, loaned money, 900 million bucks, to Genesis. Genesis is owned by Digital Currency Group. Digital Currency Group is also the parent company of the Grayscale Bitcoin Trust. So Genesis, which is owned by Digital Currency Group, they froze withdrawals over a month ago. In the middle of November, they froze withdrawals. They're insolvent, which caused Gemini to freeze withdrawals. They're now insolvent. This is all spillover from the FTX catastrophe because they all had money in FTT. The incestuous relationship, as Mish has described several times. So I guess Cameron Winklevoss has been trying, or they have been trying to negotiate some kind of an agreement to get their money back for their customers from Genesis. And right now he pens this open letter to Barry Silbert, who is the owner, CEO of Digital Currency Group, basically saying you have until January 5th, did he say? January 6th. Oh, no, it's the 8th. Yeah. You have until January 8th to put a proposal on the table or to answer our proposal. What happens on January 8th? I don't know.
I'm assuming
but
that's
it was
a
an
liquidity issue. Is that's what the 8th is? That's why it's such a big deal. Like they
What
pay
happens on the
people- I'm assuming that's when they can't pay their bills.
Okay. Or they just take them to court, start bankruptcy proceedings, right?
Mm-hmm.
Take several creditors can get together and start basically haul them into court to get their money back. Of course, that means they won't get their money back anytime soon. Now, I had a couple of nitpicks in this letter that Cameron Winklevoss wrote. You know, he had mentioned that Genesis had borrowed money from Gemini customers. And while that might be true, there's a couple of missing links in that chain, right? Because Gemini customers didn't loan money to Genesis. Gemini customers loaned money to Gemini. Gemini took that money and loaned it to Genesis, and then Genesis loaned it to Digital Currency Group. So Cameron Winklevoss is kind of skirting any blame that he himself has here because he's the one who made this loan to Genesis on behalf of his customers. Now, that being said, I don't think Barry Silbert is really acting in good faith here, especially with some of his replies here. I mean, Barry Silbert writes, Digital Currency Group did not borrow $1.675 billion from Genesis. Remember when I talked about how Sam Bankman-Fried will take some nuance of a question and zero in on that and, unpack that and that will be the focus of his answer to avoid answering the question he doesn't want to answer? This is Barry Silbert doing the same thing. He's saying Digital Currency Group didn't borrow $1.675 billion from Genesis. That may be factually true, but Digital Currency Group does owe $1.675 billion to Genesis. So maybe they didn't actually borrow that amount, but they do have certain debts plus promissory notes. And if you add all that up, it's $1.675 billion. So he's zeroing in. This is a real dirtbag answer from Barry Silbert here. He's zeroing in on this unimportant nuance of the letter, and that's his answer to avoid answering the fact that, hey, you owe these people money and you can't pay. Anyways, and then he goes on to provide all this other unimportant detail that really avoids the question of when are you going to pay back Gemini? And he's not answering that question because he can't pay back Gemini.
Right, and then
I think
he sent a letter 3 days ago that hasn't been answered. They've been fighting him for over a month. A 3-day problem is not a problem. That's why they're saying bad faith.
Yes. And I can tell you where this is ultimately leading to, because there is the elephant in the room in this conversation between Digital Currency Group and Genesis and Gemini is the Grayscale Bitcoin Trust, ticker GBTC. All right. If you don't know what GBTC is, this is basically, it's not an ETF, it's a trust. All right. But this was for years, this was the only way to get, for the retail investor to get exposure to Bitcoin without actually buying Bitcoin. All right. And this Grayscale Bitcoin Trust has a market cap of $1.43 billion. That's the value of all the shares. But the Bitcoin that is allegedly held in the trust, let's assume for a second all the Bitcoin is there. And I've never seen anything to suggest that the Bitcoin wouldn't be there. The Bitcoin that's in the trust is worth almost twice as much as the trust itself. Now, this is not an ETF. If this was an ETF, then Grayscale could sell Bitcoin and buy back shares and eventually bring the price up to net asset value, bring them in the equilibrium. But because this is a trust and not an ETF, they can't do that. There's no mechanism for redemption of shares for Bitcoin in this trust. And the SEC will not let them become an ETF. The SEC says no, because of FTX and because of Tether, we're not going to let you do this. So right now, the Grayscale Bitcoin Trust is trading at a 45% discount to net asset value. That means these shares are worth $8 each, but it's almost a $16 value within the trust. If you were to sell all of the Bitcoin in the Grayscale Bitcoin Trust, theoretically, it would be worth $16 a share, even though the price is only $8. Of course, the problem is when you sell that much Bitcoin, you crash the price of Bitcoin. That's one possible explanation for why it's trading at such a big discount. So where this is ultimately going, this blow up between Cameron Winklevoss and Barry Silbert, Gemini and Genesis, is Digital Currency Group is trying to separate their companies to make sure that they don't have to sell the Grayscale Trust in order to pay back what they owe to Genesis. I don't know if they're going to get away with that in bankruptcy court because the Digital Currency Group companies have commingled their funds so much. All that money that was lent to Genesis from Gemini, again, keeping the names straight is hard here. Genesis turned around and lent that money to the Digital Currency Group, and Digital Currency Group took that money and bought shares of the GBTC Trust with it because they were trading at a discount, so they lost the money. So the funds were all commingled. I don't know that Barry Silbert is going to be able to claim in bankruptcy court that Digital Currency Group and Genesis were separate entities in the subsidiary relationship. The way those funds were so commingled, he's probably not going to get away with that. And he could be forced to liquidate the Grayscale Trust. That will crash the price of Bitcoin significantly. I don't know how much Bitcoin is actually in the Grayscale Trust, but I believe they are the single largest holder of Bitcoin in the world.
There's over 600,000 Bitcoin in there.
Yeah, that's a lot. That's a lot of Bitcoin. That is enough to crash the price of Bitcoin several $1,000s overnight. So that's why this is a story you need to watch. The Genesis Gemini Digital Currency Group story between the Winklevoss twins and Barry Silbert. This is going to be an interesting one to watch play out over the next few weeks or months, possibly even years. And I also want to point out that this whole thing started with the FTX collapse, which was caused by the November 2nd article in CoinDesk. And CoinDesk is owned by Digital Currency Group, Barry Silbert's company. So this was all set in motion by Barry Silbert's own media outlet, which brings me to my next point when you're talking about crypto and when you're reading and doing DD and research on cryptos. Keep in mind that there is very little independent media in cryptocurrency. All of these crypto news outlets are typically owned by somebody who has a big interest in some project or some crypto, or is a founder or owner or an exchange CEO. So be careful when you're reading crypto articles and you read some article that says, oh, this could be the next big thing, not realizing the owner of that news site is one of the developers or one of the original founding members of this project that they're pumping. So you got to be careful in the crypto space. It's particularly rampant there. Never trade based on a single story or a single tweet or a single YouTube video, right? Always look at both sides of a trade before you get involved in it.
I'm going to hear something to blow your mind. Science fiction, right, has been talking about credits all these years. That's basically just some form of cryptocurrency.
Yeah. Or debt, right? Credit means debt, doesn't it?
Well, yeah, but when they say, hey, it's 10 credits, 10,
Yep.
you know. So that to me is a crypto because it's electronic money.
Interesting. Although they did have a metal currency in Star Wars. They didn't just
The
trade
only,
digital.
the only currency they had in Star Wars was Latinum or gold pressed Latinum.
Star Trek. That was the Ferengis, gold press Latinum.
Oh, you're right. What was
The
Star
Ferengi.
Wars?
Star Wars was credits, Imperial credits, Republic credits, but they actually had coinage.
Okay.
Yeah. Anyway, sci-fi money. Thank you, Jose Orozco. He says, you think average Joe will ever link stimmies and inflation? Average Joe will always just say and think what the press wants him to say or think, sadly. I mean, there are people like Nobel Prize winner Paul Krugman who are out there saying inflation was caused by greedy companies.
Mm-hmm.
Not stimulus, not by monetary expansion, not by supply shortages. No, just greedy companies. The companies all got together at their secret underground lair in the swamp somewhere and said, all right, y'all, it's time to raise prices this year. We're all going to be extra greedy. And they all said, oh, yeah, that's a great idea. Let's do that. Oh, good thinking, Johnson. And then, boom, inflation. That's Nobel Prize winning economist Paul Krugman. That's his explanation for inflation. I'm wondering, maybe the Fed flooded the system with money, sprinkled some in our mailbox, and then gave a whole bunch to themselves, and then said, you're welcome. That's my explanation for it. But hey.
Well, even MMT talks about inflation and the need for inflation, right? I honestly think they're running the economy hot to try and catch up for all the money they blew in the last 3 years.
This we need inflation narrative needs to stop. All right. Like, human progress is deflationary, it's disinflationary. Life gets better. Deflation is life getting better, people's quality of life improving.
Mm-hmm.
The only people who need inflation are people who have a need to constantly oppress everybody else to keep themselves above. That's who needs inflation. That's why the central bankers always have their 2% inflation target. That is the frog in the boiling water. 2%, you don't notice that water's getting hotter. Anyway, do I think the average Joe will ever link it? I don't think so, Jose. I wish they would. It's one of the missions of this channel. Our education system fails in financial education. Our media fails in financial education, and I don't think it's an accident. And look, basic finance is not that complicated. You understand a couple of key relationships, a couple of key principles, and
Hey, the Dow's negative. But
the Dow went negative.
Before we get into much of that, Mike gave us another chat.
Let's say hi to Mike real quick, and then we will take our final trip through the indexes. Hey, Mike. Thank you very much, sir, for the super chat. He says, my guess is that Tether folks sold their overpriced Bitcoins for other stables and fiat in the bull run. That's why others are broke and they aren't. That's interesting. If they sold their Bitcoin, I'm not sure they ever bought anything with the Tether. I mean, it's entirely possible that Tether just took that money and never bought anything with it. They've just been living off of it. They've been living the high life. It's very possible they did that. Maybe they bought Bitcoin. We don't know because they're not audited. They put out attestations. I mean, these are tens of billions.
Any Ponzi schemes needs new money constantly, right?
Yeah.
Anytime when you cut off that flow of money and it fails, it's probably a Ponzi scheme.
Yep. And Tether will say, oh, we're 100% transparent. We've put out our attestations. And I heard this description on Twitter somewhere. It was really, really excellent. The difference between an attestation and an audit. All right. An attestation is an Instagram model standing in front of a Lamborghini. All right. Oh, look, this Instagram model has a Lamborghini. An audit would say this Instagram model is broke. She's standing in front of a Lamborghini that is owned by some other rental company. It was rented by her cameraman so he could take the picture. The company that actually owns the Lamborghini is bankrupt, and there's a guy outside the door waiting to repossess the Lamborghini so that the bank can recover some of the money that was loaned to this rental company to buy it. Right? That's the difference between an audit and an attestation. The attestation is the picture of the model standing in front of the Lamborghini. The audit is the paper trail of who really owns it, possesses it, and who has claim to it, and who has borrowed against it. And none of these companies have ever been audited. Not FTX, not Binance, not Tether, none of them. Maybe Coinbase has. I don't know if Coinbase. I'm guessing Coinbase has been audited because they're a publicly traded company based in the U.S. I would have to verify that. Put a pin in that one. We'll verify Coinbase has been audited. But I know for a fact Binance, FTX, Tether. There's a reason why none of them are U.S. based because they can't comply. They can't. So thank you very much, Mike. I appreciate the super chat, sir. And yeah, it would not surprise me at all to learn that they sold out a long time ago at the highs. All right, let's see what Mish was talking about. He said that the indexes had gone negative. Let's see. Dow, look at that. Uh-oh. So much for the great bull run of 2023. It was fun while it lasted. The Dow is now down 49 points or 0.15%. Oh, man, here I was thinking 2023 was going to be a great year.
Look at that volume spike in the sell.
Yep, right at the open. And the S&P, well, about the same thing. S&P is just barely in negative territory, down 4 points right now, 0.13%. Gave up all those gains. NASDAQ is also negative, down 0.17% or 16.8 points. So I was saying something didn't smell right. Something had to break lower. Looks like it was stocks. DXY looks like Dixie actually gave up some of its gains also, but still up 0.7 or 0.67%. And the bond yields still down significantly lower. People are still buying bonds. Again, this looks like something of a traditional flight to safety. People buying the long end of the curve. People buying gold and silver. Gold up $22, silver up 47 cents, and stocks negative. That's a little bit more of a traditional flight to safety. That's something I would expect to see. So I feel somewhat vindicated by that, the fact that stocks went negative before the end of the stream, Mish, because that makes a little bit more sense to me.
Well, we've been saying for a while now, it just didn't feel right this morning.
Yep. And who was it that said it? Like one of the first chats before the stream even started, somebody had mentioned it.
Yeah, hold on. Let me see if I can get all the way back to the top.
Was it Keenan?
It was Keenan.
Keenan Haywood. Shout out to Keenan Haywood, who spotted that one early this morning. Said it didn't feel right. I agree. Something did not feel right this morning. So we'll keep an eye on that one. All right. It's 10 a.m. Markets have been open for a half hour. I think we're going to call it there, guys. So we'll see what's going on. Keep an eye on that Genesis Gemini story. And, well, I hope you guys all have a good year. Good luck with your New Year's resolutions. Stick with it for a little while. That's all. Mish, you got anything you want to add?
Nope. Everybody stay safe out there. It's going to be another storm coming through.
Yes, sir. Indeed. All right, guys. Until next time, live small and dream big.